Good morning, everyone. Can everyone hear me? Give me a thumbs up if you can hear. Yep, got a few reactions. That's good. So welcome, everyone. So thank you for taking the time out of your busy day to join us in this webinar. It's greatly appreciated. We're located in Ballarat, so the weather's beautiful today, blue sky, after we've had quite a bit of rain actually the last few weeks, and the season's looking great. So at this stage, all the farmers are happy and all the other businesses connected with farming is happy as well. So thank you. My name's Chris Mulcahy. I'm Director of Future Accounting. Yeah, we're very pleased to be presenting this session on carbon accounting. Now, I need to apologise from the outset because we're going to cover a lot of information today, and we're doing it in a short amount of time. So by all means, don't feel overwhelmed by what we go through, because we are covering what would normally probably take, much longer than a 30 to 40-minute session. So, but feel free to, contact us afterwards, and we will be having a question and answer session at the end of this. Also, you can type in anything along the way as well, so through the chat box. So today we'll be exploring the evolving landscape of carbon accounting and, more importantly, your carbon footprint, and in conjunction with climate-related financial disclosures for businesses. A common question is sometimes, what is carbon accounting? So in simple terms, it's recording and reporting a business's carbon emissions. So it's as simple as that, really. And a lot of what we're talking about is not actually mandatory yet. So basically, we're looking forward, and we're pretty confident of what's going to come in and what's going to be mandatory for businesses across the board. But there's nothing like being prepared, and we think getting prepared for this now is very important. And the push for better carbon accounting is coming from multiple directions. So we've got regulators are increasing disclosure requirements. Major customers, financiers, banks, consumers are really asking businesses to understand or have a better understanding of what their carbon footprint is. So we just feel it's very important for businesses to be on the front foot just to make sure that we're covering off on those things. So it's not just about compliance, it's really, setting your business up for the future. So that's basically what it's all about. So, and that's why, we're taking proactive action to make sure that's in place. We think it's very important in these types of scenarios as well to actually control what you can control. So, with so much change underway in climate policy, so much change in energy markets and customer expectation, there's a lot of that's beyond our control. But I suppose what's really important and what we're trying to really get through today is to really focus on what you can control within your business, and how you can turn these opportunities into something that's really positive within your businesses, because there will be opportunities. So with that in mind, we're just really conscious that we're starting with the basics, and the basics being that we just need to get the accounting records in place, so that we can deal with that data. And I guess once you've got the data, you can then make informed decisions. You might be aware that the new mandatory climate-related financial disclosure regime commenced for large entities from the 1st of January 2025. So now they're businesses with a turnover above 500 million and also assets of greater than 1 billion, I think. And there's a phasing in of other bigger businesses that have also got to be subject to those mandatory requirements. And I think the next phase in timeframe is the 1st of July 2026. And look, that's being described as they're rolling out these new measures and mandatory climate relating reporting. That's being described as the biggest change since the introduction of the GST. And it's not really just because there's another form to fill in or anything like that, but it's because it requires a new system, data and governance. And I guess the flow-on effect of that is, and that's probably one of the key things that we really want to get through today, is that there's a flow-on effect with all this. So even though big business is dealing with it right now, it flows through supply chains. So from listed companies right down to family farms and small business. So that's what this is all about today. The realisation that, yep, you may not the situation where, you know, bigger businesses are going to be asking you for your carbon information because that impacts their carbon reporting requirements. So it's very important that we do factor that in. And look, I've probably got my own prediction. My own prediction is that we're going to end up with a carbon tax or some form of carbon pricing. So where all businesses will be required to report a net emissions position that either has to be paid or offset. So that's where you may have heard of ACCUs, Australian Carbon Credit Units. They would be used to do that. But I think we're sort of heading towards that type of program where whether it's quarterly, 6 monthly, annually, businesses will actually have to report on their emissions. So I suppose what we're talking about really is going to have a dollar impact on all businesses in the future. And it's also worth noting too that you know, there's a lot of talk around tax reform at the moment. So the tax reform that gets spoken about, you know, they're talking about increasing GST, they're talking about winding back capital gains tax. There's even talk about the reintroduction of death duties, but a carbon tax also gets thrown into that mix as well. So there is a real, I guess, thought and that, you know, with this whole tax reform process that is underway, that at some stage, yeah, carbon tax will form part of that as well. So this is why we think, you know, preparation is the key, and that's the real reason why we've decided to get on the front foot, start running these webinars, start, you know, helping our clients and other businesses out there that are interested in learning more about this, because we just think it's a critical part of the transition that's going on at the moment and the change that's going on at the moment. And we just think that, you know, I think the more information we can get out there and help people, the better. Now, we're very fortunate to be joined by Wendy Hayward. So Wendy brings a wealth of experience in dealing with emissions reporting, accounting wise. Wendy's done a lot of work in the farming industry in terms of you know, farming and livestock operations. She's also helped out a wide range of other businesses to navigate the complexity of greenhouse gas accounting. So really just summarising what we're aiming to cover today at a high level understanding of what carbon accounting involves and how it relates to your carbon footprint. So that's the critical point. So you've got a starting, I guess, baseline of what your carbon footprint is. We're going to go through some practical steps to begin tracking and managing your emissions. And we're going to look at how tools such as Xero, the Xero add-ons such as Someday, which Wendy will touch on. There's other industry platforms such as AgriWebb in the farming space, and there's also other recognised greenhouse gas accounting frameworks that that Wendy will touch on as well to support your journey. But really today is just that high-level overview, broad understanding, and as I said, look, we're covering a lot of information in a short amount of time. We expect a lot of questions, but don't be overwhelmed. We're here to help, so by all means, yeah, don't be afraid to either send a question through the chat or even afterwards, yeah, just shoot us an email. So let's dive in, get started. So I'll hand you over to Wendy. Thanks, Wendy.
Thank you, Chris, and good morning, everyone. And I'd just like to start with that I'm probably going to repeat a lot of what Chris has said, only because it's important. I'm going to share my screen now to start the slideshow presentation. And if you see me looking the other way, it's because I'm looking at a different monitor. Starting with the why. Most people know, not everyone, that this year saw the introduction of mandatory reporting for very large businesses, and there will be a rollout over the following 2 years for medium under that and then smaller, but all large businesses. So The mandatory reporting has so far been for Scope 1 and Scope 2 emissions, but there is increasing pressure for reporting on Scope 3, which is currently voluntary. So for a business, Scope 1 covers emissions that occur at your facilities and it owns or controls. So this is fuel consumption used for vehicles, equipment. Your Scope 2 is basically your electricity purchased if you purchase steam, heating or cooling. And then Scope 3 covers all other emissions in the value chain. Now this one, you've got your upstream and your downstream emissions. So your upstream emissions are before a product reaches you. So you covers things like making and transporting of raw materials or products that you buy. Scope 3 also covers business travel, waste disposal, and emissions from any leased assets. Downstream is transportation and distribution of products that you sell. So there's a lot to it. And at the moment, it's not mandatory for small to medium or agriculture businesses to report their emissions, but there is a growing increase of, sorry, I wasn't supposed to go that far, of the need to report. So even if you're not directly required to report, you might have a buyer who wants to approach you and wants to know what your emissions are. And the NAB and CBA have already announced that they're going to start looking at borrowers' emissions. So getting on the front foot, as Chris said, will help you in the long run. So this is the way business seems to be going at the moment. This year, R&J Batteries announced that they're now a carbon neutral organization. They achieved this by identifying their emissions, making company changes, and also purchasing carbon credits. So one of the big questions is why would they want to do that? Well, for them, it's about their environmental responsibilities, leadership, and their commitment to sustainability, about operational improvements, emissions reductions, and possibly to enhance their reputation. So carbon accounting, as Chris said, it's a calculation of your greenhouse gases. Now, the title alone, carbon accounting, is misleading because it's all about the greenhouse gases. So there are 7 major greenhouse gases listed here, and all of those have different potencies and different global warming potentials over 100 years. So everything is converted to a carbon dioxide equivalent so that it can be measured. So this global warming potential over 100 years, so with livestock and methane, which is the largest source of livestock emissions, it's hard to quantify when over 100 years when methane actually, it's recognized that methane breaks down the atmosphere after about 10 to 14 years. So accounting for that warming effect over a longer period, I see as problematic if the breakdown factor is not accounted for. So the poor cows get a hard time. If they produce methane, methane breaks down, back into the ground, back into the cow, and we've got a cycle. Whereas industry is putting new carbons into the atmosphere, a cow is cycling. It eats, produces methane, back down into the ground, bit of fertilizer to help the microbes, help the grass grow, cow eats it, and this cycles every 10 to 14 years. So that alone is a bit misleading to me. And so an interesting fact, what Australia emits in 1 year, China emits in 12 days. So you've got the source of that article there if anyone's interested in reading that. So we're moving on to how are we going to do this? Well, as Chris said, don't be overwhelmed. It's about getting started and collecting recording your data and where you store it. So it is a simple process once you actually get started. So, and leveraging existing platforms that you're already using, your accounting package or any industry related software that you're using. And with the it being mandatory for emissions reporting, there are now numerous carbon software providers who have different target audiences. So I'm going to show you a list that was published in Accounting Daily. So as you can see here on the left, there are a lot of providers. We're going to be looking at Someday in a little bit. And now I've got a full breakdown on each of these companies, what their target audiences are, targeted industries, what they integrate with, and what the cost is for those. So keeping in mind that with mandatory reporting, because agriculture was not mandatory, these providers didn't exactly cater for agriculture. So the PICCC, Primary Industries Climate Challenge Centre, built a calculating tool and called it the Greenhouse Accounting Framework, or GAF for short, which was then the backbone for the creation of Ruminati, which is a software provider for agriculture. The MLA have an accounting tool built into their website. And then recently we had the release of the AIA Environmental Accounting Platform. So with the MLA at the same time released a Carbon Accounting Technical Manual, and the AIA released a Common Approach for Australian Agriculture. Now, if you want copies of the list of software providers, or if you want a copy of the MLA Technical Manual or the AIAs, just shoot a message through the chat and we can email those out to you. So using your accounting platform, I'm using Xero here as an example. It's a great way of storing all of your record keeping in one place. And there's a couple of ways you can get your invoices into Xero. You can email them directly into your account. You can upload them, or you can drag and drop to select your files. You'll get them into the draft. When you import them, it picks up a lot of the data and saves on your having to type everything in. And you can do the same then with sales. If you've got any RCTIs, it's a great storage place. So now for small business, just keeping in mind, it's not mandatory for small businesses to report, but making a start, you only need to look at your scope 1 and 2. So your scope 1 is all of your fuels used for your businesses, and your scope 2, your electricity purchases. Now with your scope 1, you can also do this through your asset register by identifying which uses mobile combustion, your vehicles, trucks, cars, your stationary combustion like fixed generators, fixed plant or equipment, and your fugitive emissions, which not a lot of people have because this is all in relation to refrigeration. So I've just got a very, very basic sample here taken from an Excel spreadsheet on recording diesel and petrol. I've just got the months listed down the side and how many litres were purchased each month. And then at the end of the year, I've got a total. If you wanted to do it by vehicle, you can just list your vehicles and then how much each one uses per month. With electricity, it's just another basic Excel spreadsheet. Now, in this example, like some businesses have more than one electricity bill. So what we're recording is the time frame and the kilowatts used for each building. And then we have a monthly total at the side, and then we've got our annual usage down the bottom. So in summary, again, it's not mandatory for small to medium businesses, but a large business that you deal with may ask you for your emissions because that will go towards their scope 3. Your bank may ask you for your emissions. As I said, there's 2 already that have announced that they will start doing that. Making a start, you're going to get ahead, so you don't have to play catch up. You only need to look at your scope 1 and 2. Just keep it simple. So the NGER have a free calculating tool and user guide available. So this is the NGER, this is their user guide. It gives you basic steps on how to use their calculator. So on the start page, it's giving you a summary of what it's about and how to use the calculator. They've got an example in here for you. So you don't have to, you can just pick from here what your fuel is, type in your amount, and then it breaks it down for you into your CO2, CH4, and your N2O. And then at the end, you'll get a report that tracks your emissions. Now, this calculator was designed to see if your company was emitting enough for you to have to mandatory report, but it's a really good free tool that you can use to calculate your scope 1 and your scope 2 emissions. So keeping in mind, it's not mandatory, but it is valuable. Making a start now will be of huge benefit. I'm going to have a look now. Oh, here we go, the NGER. So if anyone wants a copy of the NGER calculator, NGER, or their manual, just shoot us a message in chat and we can email them to you. So I'm going to have a look now at the Someday accounting platform. This one is a lot more technical, but this is if you want to report on your scope 1, 2, and 3. As I said, at the moment, it's still voluntary, so you don't have to do it. So it covers your scope 1, 2, and 3, your categories, the data required, and the common sources of where your data is. The great thing about the Someday platform, it has a lot of templates built into it that you can download, so you don't have to create your own. It also has some very valuable working papers. This one here is an example of their electricity one. It's got the same information as what I had in my basic spreadsheet, the period of time, the quantity, location, and the added advantage here is if you feed back into the grid, it takes it off your consumption to give your net consumption. So when you sign up with Someday, you automatically integrate it into your Zero program. And I highly recommend the Someday Academy. There's some great learning tools in there, not just about the platform itself, but in the different scopes and what they mean and how to track. In this example, we've already picked our time frame of what we're counting on. So we're looking at July 24, 25, which has already been brought in from our Zero account. Now, in this example, we've progressed through what needs to be done so that I can actually show you some examples. Once you've dragged your yearly in, well, you start with your carbon ledger. And like Zero, if you've got a tracking category, it will flow into this. If you don't have a tracking category, but you'd like to have one, you can create them here. So all of the other items have been reconciled. So here I'm just giving an example. So my telephone usage is scope 3, telecommunications, purchased goods and services. So my electricity here is scope 2 and it's electricity. My fuel that I've purchased was scope 1. Now I haven't identified, is this mobile combustion or stationary combustion? This is where you get to choose. So once you have finished your carbon ledger, you go further into some accounting. So in here are mobile combustion. I've just entered that I've got a truck. It's post 2004 liters. I'm in Australia. And then I'm looking at, I use about 1,000 liters a month in this. Now you can export a template from here to fill in, or you can just add it in yourself item by item. So I just added that item as an example. So it's telling me that my truck produces 36,614 kilograms of CO2 equivalent. And down here I've got my stationary combustion. I've got a fixed generator that uses diesel. Fugitive emissions I haven't calculated because this particular company doesn't have fridges or freezers. Process emissions. This particular company had used some fertilizer. Now, if you had concrete products or you're smelting steel, this is where you would put them in as a process. So we've had some fertilizer, direct nitrogen oxidized, and then putting in how much we've used. So they used 54 ton in July, 30 in September, and it then gives me the kilogram of CO2 equivalent. Move on to our scope 2. So in this one, you can import a template. So you can download a template and then bring it back in, or you can just add it by item. And because you've been tracking your electricity by the month, you now know how much you used for each month. You'll add in whether you're doing it by asset, house, shed, enter them in here. You save it and close it, and it'll give you your emissions factor here. Your scope 3, then everything else, purchase goods and services. So we purchase quite a lot of different things. There is a difference here. This has been calculated on a spend basis, which is dollar value. If you change this to activity, you can then enter in that, you can enter the tonnage of lime that you've used. That's our scope 3. To take it a step further, you can work on your emissions intensity. In this one, as an example, I've just put in one of the vehicles, and you can put in all of your vehicles and then compare each one to see which is the highest emission. So you can think about, oh, should I get rid of that one? It's really adding up to my annual totals. Moving on to the reports, there are a lot of reports you can pull from someday, but seeing as we're making a start, what we're going to be looking at is our carbon baseline report. Now, I've just taken some extracts from a report. So someday it's great. It gives you some little tips highlighted in yellow on what you should do. So this is our first year. So this would be our baseline. So we don't have anything to compare it to. So there's no variations. So we've got our scope 1, scope 2, and 3. Now, in our example, we haven't entered our electricity, so nothing has come through here, but all of our scope 3 emissions have come through here. So this is an example of what their full report looks like. If anyone would like a copy of this emails to them, feel free to send in a message and we can send you out a copy of that. It's very detailed. It's more detailed than what the small business, medium business need at the moment. And as I said, someday is if you want to report scope 1, 2, and 3. As Chris mentioned before, I've done an awful lot of work in agriculture over the last few years. So I'm going to give you an example of how we've calculated emissions for a beef and sheep enterprise. So we've been using Xero to store all of our invoices, receipts, etc. We've used Excel to collate our calculations. We have taken our livestock figures from the AgriWeb platform and used the GAF calculator, which I mentioned earlier. And so you download your GAF calculator and this is what you get. Now, I know this is a lot to take in, but it's not relevant to everyone. Starting on our summary page, we only need to look at the first 4 tabs. The rest of these are the calculation modules for this summary page. So anyone who's familiar with livestock, our livestock numbers are being recorded by season. We're entering in how many we have, the breakdown of sheep, rams, wethers, ewes, what their weight is throughout the season, and their live weight gains throughout the season. Then we're going to enter our annual purchases, annual sales, our wool inventory, and further down we've got our fertilizers, our fuels, electricity, any feed purchases, and any chemicals used on the farm. It's the same then for our beef. Our stock numbers, weights, live weight gains. And this all feeds into the data summary. So you're thinking, how am I going to possibly do that? Well, I've built a very basic calculator. So I'm looking at my shearing, how many I have shorn for the year. At the end of the year, I have a total and an average of what the kilogram per head of wool is. I've got my sales, how many I have sold and what their live weight was. End of the year, I've got my totals and an average for the sales in weight for the year. And obviously I didn't purchase very much for that year, but I do have them recorded here and what their live weights were. And the same for the cattle sales, quantity sold per month, their live weights sold, and anything that was purchased. Our electricity here is an example that I had shown you earlier. We're recording by the month, kilowatts used, then at the end I've got a total for each month. Now in this example, the enterprise is made up of 5% cattle and 95% sheep. So that's how my electricity is being divided up. And it's the same then for my diesel and petrol. I've recorded monthly how many litres I've purchased, and I've broken it down to percentage for cattle and sheep again. It's the same with chemical and fertilizer purchased, grain and hay purchased. Then I've got my summary. I now have all of my totals that I need to enter into my calculator. So I've got all of these totals. I can just enter in here. So for those not understanding livestock emissions, gaining an understanding of them gives you a better understanding of what your farm is doing. And a general rule of thumb, 80% of your emissions comes directly from the animal. And to enable livestock calculation, it's all based on your location and how much they eat, while reducing your stock number and having lightweight animals is not how to run a business. You're not going to make any money from doing that. So the only way we can calculate this is by livestock emissions intensity, which is the livestock weight in kilograms with the kilograms of CO2. So this allows for comparisons with other enterprises regardless of their scale. It doesn't penalize you from having more stock, and it gives an opportunity to calculate reductions.
Hey, Wendy, can I just butt in and ask a question?
Yeah, sure.
So if you're selling livestock to, say, Coles or Woolworths, say lambs or something like that, and they ask for your emissions information, what would you actually provide them? Is there a report? Is there a summary based on this information?
A summary report on, it would be your emissions intensity, not on your Scope 1, Scope 2, or Scope 3, we'll get into that now, is emissions intensity. So I know for a fact that Thomas Foods have already started talking to their suppliers and have run workshops getting their suppliers to start recording their data. And even though not directly said, they have implied that they will first purchase from the lower emitters and pay a premium price to the lowest emitters. So in this example here, 21-22 was our baseline year. Sorry, Chris, did that answer your question?
Yeah, yep. No, it did. So because I think collating all this information is great, and that Thomas Food example is exactly where I think it's all heading, isn't it really? And I know we have got other clients that are being asked now for information and they haven't necessarily got it, but we're just starting to work through this process now so that we can actually provide it.
Yep. Well, I'll keep on with this example. So, so we built a 4-year profile on this carbon footprint for this particular example. And you can see like the emissions from electricity, they're not huge, but they are important. So this is everything that happens on farm. And in this, our fertilizer is included in here that we purchase, because once we spread fertilizer on the ground, the soil then emits nitric oxide. So we're responsible for that. So everything else we purchase, any feed, electricity, which is not our Scope 2 emission. This is the electricity purchased from goods. Our fertilizers, these emissions are related to the upstream. So this is before the product actually reaches us. So in this example, our sheep and meat, our first year was 18.3, second year it was 13.9, third year 9.2, and 24-25 it was down to 7.5. So on our baseline, we've reduced it by 24% off the baseline. This year we've gone down 49.7 against the baseline. And this year, a total of 59% down against our baseline. And everybody's probably wondering, how are you reducing it that much? Increased production. So in the MLA technical manual that I had mentioned earlier, they have given us an expected range of where livestock should be. So the expected range for livestock is 9 to 18. And now our first year it was 166, way off. But then by 24-25, we're down to 8.1, well within the range, well, actually lower than the range and lower than the average. Our sheep, then the range is 6 to 10. So every year we can see reductions. By 23-24, we're within the range. 24-25, still in the range and lower than the average. Same with our wool reduction, slight increase this year. 24-25, we're down to 27.8, which is based on the kilograms of greasy wool. So we're within the range and still slightly above an average. So I've just built some graphs here to track how we have been doing over those 4 years. And as you can see, they're very up and down, but it's the end result that we're looking at. And we can show that we have been reducing our emissions intensity over the years. And that's what your bank may be looking for. And I know that was an awful lot to take in. And as I said, it's voluntary. So I'll put in some useful links here to the Someday platform I've been using, the PICCC Centre, Ruminati, if anyone wants to have a look at that one, the MLA, their website, AIA, their common approach, and then for anyone who's interested in carbon projects, I've got some information down here on that. I've also found that there is currently a government grant available if you're interested in planting trees. And I think that is the end of me talking, Chris. And I hope some people have some questions to ask in relation to that. So, Chris, I'm going to hand it back over to you. You can have a look and see if we've got any Q&As. I've got some come through by email because someone wasn't able to get on the Q&A. And Chris, your microphone is still off.
What you didn't hear any of that? I was just complimenting you. Oh, well, bad luck next time. No, well done. No, you did a great job. Well done, condensing all that information into a short period of time. And yeah, look, it sort of looks pretty full on though, doesn't it, from a record keeping perspective? But I think, what we're really trying to get across here is that there are systems that we do recommend using, and it's pretty simple to probably, or I guess the simple approach is just to build on what you've currently got. So whether you're using Xero, QuickBooks, some other type of record keeping system, just build on that and add extra tools as we go. And that someday program is probably one of the key ones that we're sort of seeing getting used. It is very popular, and just the way that connects with the likes of Xero and drags the necessary information through. So I think that's, I guess the key takeaways for me from this is probably just record keeping. We don't have to do anything more than that, than really just get our systems in place and actually start thinking about what our scope 1 and 2 emissions are. And also, this might contradict what I've just said, but there is flow-on effects. So even though that we're not mandatorily required to report, we're going to get dragged into it anyway, because big businesses that are kicked off 1 January 2025, the next round of businesses, so that was turnover of 500 million or more, the next phase kicks in from the 1st of July 2026, and that's 200 million plus of revenue or 500 mil of assets. And then 1 July 2027, it's 50 mil of turnover or 25 mil of assets. So within a couple of years, you've got all these businesses that are going to be reporting. You're going to be dealing with a lot of these organisations, and I think by then things will have ramped up where that reporting procedure from their perspective is, pretty important, and they'll be asking questions of their customers, suppliers, of what their emissions intensity is. So you can sort of see that happening. As you're probably well aware, COP30's on at the moment, so this is a very timely webinar. So all the climate crusaders will have flown into Brazil in their private jets, and they'll be all having a chat, and then they'll be telling us all the bad things that we're doing to the environment and telling us what we need to do moving forward. But there's all that noise in the background going on, and the politics. I think the Liberal Party are going to decide what they're doing with the net zero thing today. But look, it's all irrelevant, really. We've just got to focus on our businesses and see how we can make sure that we're, doing what we can, controlling what we can control to make sure that, we're, taking advantage of the opportunities, but also making sure that we're not going to, see this as a detriment to our business, because it's so important. It's shifting in that direction. I don't think we can stop it now. So I think we've just got to comply and, start building in those records. Hey, Wendy, one question I had in terms of getting a baseline now versus later, are there advantages in sort of looking at your numbers now and starting off with a really high baseline to then show that you've made improvements?
Yeah, well, making the start is the key, making a start. And if you've got a really high starting figure, and then that you can show that over time that you're making reductions, um, it it may, it's not guaranteed, but it may help strengthen your loan application or refinancing. The CBA and NAB both have green loans at the moment. So if you can show that you're reducing emissions, and if you want to replace some infrastructure that to something that is more greener, you can get a lower interest rate on your loan. But it can also just be used to enhance your reputation with your major customers by the fact that you can identify your emissions, you can show you're working on reducing them. And if you've got excellent record keeping skills, you can always backtrack and build your emissions from a year or two ago to build a profile for yourself. But it really depends on how good your record keeping has been, whether you can access that data very fast. And you can build a profile over a year or two just so you can see yourself what your emissions are like, regardless of whether you're going to report them to anyone else.
There's a few other questions in the chat box. So who do we actually report to? So if we are reporting, or the bigger businesses that are reporting, is that just being reported?
Well, initially, because it's voluntary, you don't have to report to anyone. But if your customers, your finances, your bankers, or industry bodies may request the information, but I think over time there's going to be more formal reporting that'll have to be done through the government, and it's not structured at the moment because everything is still voluntary. But yeah, your customers and your banks may very soon turn around and say, what are your emissions data?
Yeah, and you see now, like for the publicly listed companies that have to report on this stuff, or as part of their I guess requirements being an ASX listed company, yeah, you sort of see that I guess shareholders are forcing them to make change, and there's always a big section in the annual report now, and at AGMs there's a section that goes over all this ESG side of things. So I guess it's sort of happening in the background without government actually enforcing laws to make it happen, but at some point in time you can see that that's what's going to play out.
Well, the R&J batteries is a perfect example of that. I don't know if they fit into the group 1, 2, or 3 reporting timeframes, but they took the time to identify their emissions. They've made company changes to reduce their emissions, and okay, they had the advantage that they were financially able to buy carbon credits, and now they're a carbon neutral company.
Now, here's a good question, Wendy. I think we were discussing this the other day. If I use a compost source for nitrogen, how do I count this?
You account for it on application. If you've got it on storage, just in storage, you don't need to account for it because it's not on the ground. It's only when it goes onto the ground that the soil releases the nitric oxide into the atmosphere.
Yeah,
So,
sorry, you go.
no, but by recording your data now and understanding what your emissions factors are, that you can go to an alternative from your N. You can look at a green fertilizer that's not going to add to your emissions factors.
Yeah, so therefore compost in this question would obviously be lower than your manufactured urea.
Yeah.
Yeah, yeah, okay.
But the thing is that you need to start looking at what the emissions are. You know that you're using it, but you don't know what your emissions are until you actually start recording and calculating them.
Yeah, right, here's a question too. Can tracking emissions actually help reduce costs in my business?
Right, that's a good one.
Well, I suppose, yeah, again, there's examples where people have obviously put solar panels on their roof and reduce their power costs and so forth. There's the upfront capital costs, but apart from that, yeah, so I suppose that's, yeah, I guess what we're probably finding, particularly in the farming sector, is that, and this might sound wrong, but almost going back to more of a traditional way of farming. And there's a lot of, and also, I guess, talking about livestock and intensity of livestock, we've noticed that, there's a lot more marketing around the studs now saying that, you know, they've got faster growing animals, so therefore they're on the farm for less time. So there's a lot of improvements being made in all industries like that to sort of reduce that intensity.
Yeah, and also for non-agriculture, that if you've got a fleet of vehicles and you start looking at the emissions per vehicle, you may identify one that has higher emissions than the other. So by eliminating that particular vehicle, you're going to reduce your emissions. So it's not until you actually start looking at your emissions that you can identify what changes you can actually implement. And as I said, if you have a vehicle and you decide, oh, I think I'll try this in and get an electric vehicle, your bank is going to give you a green loan with a lower interest rate because you're looking at reducing your emissions.
Fair enough. Now, Bron, what about your question about compost? Would you mind just giving us or sending through your email address? We might just contact you directly if that's okay. Any other questions? So we're about to wrap it up. Got a few minutes to go. So I suppose next steps, I guess, yeah, as Wendy touched on, just identifying your starting point. That's probably the critical thing to sort of get your head around everything that we've spoken about today. Get in contact with any questions, but just identify where your starting point is. Choose your tools. Yeah, look, most people will be using a lot of this software applications already, so it's just a matter of using them to their full potential. They're all adjusting, I guess, to be able to deal with these types of add-ons and so forth to make this much simpler. And we're expecting that to continue and things will keep improving. Set a simple plan. Yeah, just agree on a few practical actions. It might be as simple as where you're storing power bills and the information that you're adding in, making sure that you're not only putting the dollar figure in, but you're putting the is it kilowatts? That yeah, or putting the the measurement of energy usage in there as well. Yeah, make sure you have a chat with your advisors just to make sure that they're across it because I think this is part of your overall business planning because this is all going to happen. I think we can't stop it. So we can't just put our head in the sand and watch it go past. We've got to be part of this now and work out ways that we can keep up to date with everything as well as making sure that we pick up on any opportunities that might be available and just staying informed. Like there's a lot of talk out there, but I think you'll be part of our database now and, with all the information that we're continuing to put together and share, we'll make sure that, that goes out to everyone as well. Anything else from your point of view, Wendy? I think you might be on mute. Hey, Wendy, you might be on mute, I think.
Oh, thanks. How accurate does your data need to be when just getting started? Question come through in the chat. I think to start with, it's really making a start and making improvements as you go along to be as accurate as you can to start. And then moving forward, once you get into the rhythm of actually tracking things, you'll get a system going and you'll see the difference yourself that you're more accurate as you go along.
Rightio. Well, that might be about it, I think. So thank you, everyone. Thanks for attending. Yeah, just keep a lookout for us on socials and also, as I said, emails as well. We'll try not to annoy or bombard you too much, but yeah, feel free to reach out at any time. We're here to help. We work with a lot of family and small businesses, farmers and all other industries as well. So yeah, look, just yell out if you need assistance. So we might wrap it up now. So thank you and all the best for the rest of the day. Thanks, Wendy.
Thank you.
Thanks, everyone.